Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello everyone, welcome to today's video. Today is Friday. The jobs report is supposed to be coming out today at 8:30. So we're going to see how the market reacts to that report later today. I did want to mention that I am close to 100 subscribers on this channel. So I want to thank everybody who has supported me for watching these videos. I hope that you're not just watching this for entertainment and watching me make money every week, but I hope that you are also benefiting from these videos. When we do reach 100 subscribers, let me know in the comments below what you want this channel to do when we do reach 100 subscribers. And if it's reasonable and we're able to do it, then I'll be able to make some of those suggestions. So let me know what you think we should do when we reach 100 subscribers. So as I said, the jobs report is coming out today. We're going to see how the market reacts to that later today. But I did want to talk about the moves that I made this week. As you can see here, I've added $157 to my passive income in the first week of June. Right? Last month, we made $363 in passive income. And I already added $157 to that in the first week of June. So we're on track to beat the passive income that I made in March. So that is my goal every month to make more passive income than I did the month prior. So we're on track for that, ladies and gentlemen. But let's take a look at the moves that I made to get me to the $157 of passive income this week. Let me just go to Bitfarms here. As you can see here, ladies and gentlemen, nothing has changed. My dollar cost average is still 253. I own 1,200 shares of Bitfarms. But take a look at the total return, ladies and gentlemen. The total return is now close to zero, -0. We've been in the negative for a while. If you've seen my earlier videos, my very first videos, this number was at -$800. So I was down $800. But we didn't really lose that money. As you can see, it's gone up. We're very close to breaking even now. And soon I'll be making a profit on my shares of Bitfarms. But I've already collected my profit in premiums, as you can see with my buying power, right? I've made $809 in passive income since I started using the will strategy with Bitfarms. So I've already collected my profit here. So there's no need to worry about this number right here. Okay, this number is going to always go up and down. Okay, with the market volatility. So, but that there's no need to worry about that. But let's take a look at what moves I made this week to get me to $157 of passive income this week. So as you can see here, on June, I already talked about the moves that I made here on my last video, right? But let's take a look at what else I was able to do here. So I bought back the $1.50 put that was expiring August 16th. I bought it back for $8. I did make a gain there. I was winning on that option. And I also bought back this $2 put expiring July 19th for $15. So I also was winning in that trade. So that is why I decided to buy these two options back. And I was able to free up $350 in collateral. So I had $350. I also deposited $150. So that gave me a total of $500 that I could use now to be held as collateral. So what I did is I sold two $2.50 put options expiring August 16th for $42 and $41. So that gave me $83. So I spent $23 and I made $83, right? So that is how I was able to come up to the $157 that I've made in the first week of June. So that's great, ladies and gentlemen. As you can see here, using the wheel strategy has many, many benefits. But let's go into a couple of stories that are coming out on Bitfarms. Um, let's take a look at Riot. You see here I have Riot on the search bar. So why do I want to talk about Riot? Well, Riot, as we see from the news here, Riot Platforms acquires 12% stake in rival Bitfarms. So they're continuing to buy shares of Bitfarms. They still want to buy out Bitfarms. However, as you can see now by the price of Bitfarms being at 247 right now, the original offer that Riot made to buy out Bitfarms was $2.30. So they were hoping to buy them out at $2.30 per share. But that's not going to happen, right? But they still are attempting to buy out Bitfarms. So what are they doing? Let's take a look at this news report here. Bitcoin miner Riot Platforms said on Wednesday it has acquired ownership of 12% stake in rival Bitfarms. The company bought around 1.5 million shares in Bitfarms on Wednesday at the price of about $2.45 per purchase share, it said in a statement. So as we can see here, it's costing them more than $2.30 a share now to buy Bitfarms. But they're still long Bitfarms, ladies and gentlemen. Riot is long Bitfarms. They believe in Bitfarms, okay? Riot said prior to this acquisition, it beneficially owned about 11.63% of shares in Bitfarms. The company said it intends to request a special shareholder meeting to add independent directors to Bitfarms' board, citing concerns regarding its corporate governance. So Riot is still claiming that Bitfarms is having problems in the governance of their company. They're still having problems in leadership with the company. But let's take a look at the rest of this report here. It says the announcement comes after investment firm Carousel Capital revealed a short position in Riot Platforms earlier in the day, sending shares of the Bitcoin miner down as much as 9%. So as we can see from this part of the report here, it seems that Riot Platforms is actually the one having problems, right? We don't know where their problems are right now. It could be in leadership, it could be in operations, right? But they are having problems at Riot Platforms, and that is why they are attempting to buy out Bitfarms. They need Bitfarms in order to execute on their business plans going forward. They're not able to do it on their own. They're attempting to buy out Bitfarms so that they could have a better strategy going forward. However, Bitfarms does not need Riot Platforms. They do not need somebody to buy them out. Bitfarms is executing on their business plan, their operation targets for the end of the year. They are executing. At the end of this month, which is June, Bitfarms should reach 12 exahash per second of computing power. So they are going to grow. Their stock at that point should be at between $3 and $4. So by the end of June, look for Bitfarms shares to be at $3 to $4. So Riot is going to have to spend a lot more money to buy out Bitfarms. But once again, this could be a bluff that the CEO is doing to see if Bitfarms will fold over and just sell the company to them, right? But either way, Riot is going to win by acquiring Bitfarms shares because they know that Bitfarms shares should be valued at a higher price. So once the market recognizes this and it corrects itself, then the shares that Riot owns of Bitfarms will be worth a lot more, and they could even sell those shares later on down the line. So it's a win-win for them, right? Either they buy Bitfarms and helps them with their business operations going forward, or they just trade Bitfarm shares and make money from the capital gains that they make from the shares of Bitfarms, right? So it's a win-win for Riot Platforms. But remember, Bitfarms does not need Riot Platforms. Riot needs Bitfarms. So if you are a Riot shareholder, ladies and gentlemen, I'm sorry to tell you, but you are also long Bitfarms. You are also investing in Bitfarms. So why not just buy shares of Bitfarms, which is at a much cheaper price right now? Right now, Bitfarms are $2.47. Riot is at $10, right? But we know that there's short interest on Riot Platforms. And we need short sellers, ladies and gentlemen. We need short sellers in the market. We need these funds, these hedge funds or trust funds that really do deep dives into the balance sheets of these companies and help them to stay honest, right? Short sellers do a lot of research into the company's balance sheets, their operations, their assets, their debt, and they look for companies that are overvalued and they short sell them, right? They figure, well, this company is going to correct itself soon. The market is going to recognize this company is not should not be valued at this price, so they short sell the company. Okay, so that's why we need short sellers in the market to keep companies honest. All right. Regardless of what anybody is telling you out there, we need short sellers in the market. Okay. Sometimes they can become greedy, as we saw from the meme stock era with GameStop shares and that company being shorted 150%. 150% of GameStop shares were being shorted. How is that even possible? Well, that's possible because they were being greedy, right? At that time. But I'm pretty sure they learned their lesson now. Um, this current trend of meme stocks is actually going on right now too with GameStop and as well. The short interest on GameStop right now is not what it was during the first trend of meme stocks, right? The short interest right now on GameStop is about 20%. So I'm pretty sure hedge funds learned their lesson. They're not going to short GameStop as much as they were in the past. Okay. And they are paying attention now to social media apps to let them know where retail investors are interested in. Okay. So that meme stock era that happened in 2021, I don't believe that's going to happen again. So I'm not concerned about that. And you shouldn't be either. Right? You want to make sure that what you invest in really has value and it grows going forward. Right, but the Bitcoin miner had made a proposal to acquire all shares of Bitfarms last week for about $950 million in total equity value. So they believe that Bitfarms should be valued at $950 million. Bitfarms believes it should be valued at way more than that. So that's why they rejected Riot's offer to buy them out, okay, at that value of $950 million. But if we look at what the Bitfarms value is at the moment, let me show you what their market value is right now. You could find that out from the market cap. Okay, so the market cap tells us, let me see where it's at. Right here, market cap. The market cap tells us that Bitfarms is currently at $2.40 a share. Its market value is $739 million. So Riot did offer to buy them out at more than $2.40 a share, actually, because they said they were going to buy them out for $950 million. Right? And they still might do that if they continue to buy shares of Bitfarms. But like I said, that's gonna send shares of Bitfarms up to between $3 and $4 a share. And it's gonna get there anyway because they're executing on their business plan. By June, they should be at $3 to $4 on their own. Okay, so they don't need anybody buying them out. All right, so that's what I wanted to talk about on my video today, ladies and gentlemen. On my next video, okay, I want to talk about, and you might have seen these other stocks that I'm invested in here, LQR. What's LQR, right? As you can see, I only own 50 shares of LQR right now at the moment. It's a very small position in my portfolio, but I'm going to talk about this company on another video so you can see what I was doing with it. When I started investing in the stock market, I was interested in startup companies. So LQR is a startup company. And matter of fact, let me see if I have time to talk about it today. All right. So LQR, as you can see here, it's a startup, ladies and gentlemen. It's only been around less than a year. Okay. It listed on the stock market in August of 2023. So it hasn't even been on the stock market for a year. Okay. But what is this company, LQR House Incorporated? Let's take a look at what it's about. It says LQR House provides digital marketing and brand development for alcoholic beverage space. It intends to integrate the supply, sales, and marketing facets of the alcoholic beverage space into one easy-to-use platform and become the one-stop shop for everything related to alcohol. The company was founded on January 11th, 2021. Okay. So, ladies and gentlemen, uh, I don't know if you like alcohol. I don't know if you like drinking. I myself do drink once in a while, not too often, right? And I mean, if you choose not to drink alcohol, that's fine too, right? On this in this company's website, uh, you have other options besides alcohol, right? We know there's months where people don't drink alcohol at all, so they do have other options, right? Other things that they sell on their website for those months where people choose not to drink as much, okay? But if you do choose to drink, ladies and gentlemen, all right, just be reasonable in the amount of drinks that you have. Do not abuse alcohol. I don't recommend it. You're gonna hurt yourself and you may hurt others as well. Okay, so I don't recommend that. So, but LQR House, it has a niche in the market. There's not too many companies doing what they're doing right now. So I believe this startup, as a startup company, it's worth my investment, right? They have a pretty good CEO and Sean Dollinger. He has a lot of social media presence, and he does make content as well. You can look him up if you want to. But let's take a look at what happened with this company when they started, right? As we can see here, now they were in trouble, right? When they did their initial public offering, they were in trouble. So, they were losing, between 12 and $20 a share, right? They were losing between 12 and $20 a share. But what did they do? They wanted to uh, continue to reward shareholders. They wanted to make sure that their shareholders were compensated, and so what they chose to do, as you could take a look from my history here, I'm going to show you what they chose to do. They chose to do a reverse stock split. So they did a 1-for-60 stock split, reverse stock split. Okay, so what does that mean? Well, when they did the initial public offering, they had around 300 million shares that they offered to the market, right? So they had 300 million shares outstanding in the market, right? When they did their initial public offering. When they did the 60-to-1 reverse stock split, well, that gave them just under 5 million shares now. Okay, so now they only have 5 million shares outstanding in the stock market. How do we know that? Well, just take a look at their market cap. Okay, their stock is valued at $1. It's about $1 right now, right? So $1 times, let's take a look at their market cap. The market cap is 5 million right now. So that's about $1 per share. So that's about 5 million shares that they have outstanding right now. Okay. I own 50 shares. So how much of the company do I own myself personally? 0.001% of this company is what I own with 50 shares, with my 50 shares. Okay. But they have a very little amount of shares outstanding in the stock market. So this company can easily go up in value once more interest comes into it, once they start becoming profitable, and they're very close to that right now. That decision to do the 60-to-1 reverse stock split or 1-for-60 reverse stock split, that really paid off for them. As you can see in their last earnings report, they're very close to breaking even now. They're expected to only lose 35 cents a share now after they were losing, close to $20 per share. But now they're only losing 35 cents per share, right, that they have outstanding. So they're very close to being profitable now. They have a niche in the market. So this company is going to do well in the future. All right. So this is a startup. When I started investing in them, I was swing trading them. okay? I was swing trading this company. So what does that mean? That I was swing trading them? Well, what that means is I was looking for opportunities to buy them when they were down and selling them when they were up. So let me show you what I did, okay? Let me show you some of the things that I did. I'll just show you a few things. So I was buying when it was at $1.72, $1.15, $1.20, $1.26, $1.81, $1.84, right? Kept buying. I kept buying $1.76, kept buying to $2.14, and then here is where I sold. I sold at $3.81, right? When it was at $3.81 per share. And then I bought, I kept buying, and then I sold. Look here, I sold at $5.40, right? So so when you swing trade, ladies and gentlemen, you want to buy shares when they're very low, very cheap, $3.75, $4, and then sell them when they go up, okay? $5.40. You could do that very easily. You don't have to be on the market 24 hours a day. There's people who do this for a living, okay? There's people who are doing this as a job, okay? So this is what they do. They swing trade. They look for opportunities to buy low and then sell high every day. Every day they're looking for these opportunities. That is why you will see a stock go up and down every day, okay? Because there's people who do this for a living. So they want to make money every day, not just for themselves, but they also have customers that they do this for, okay? So that is why the stocks go up and down. Stock prices go up and down every day. But this is what I was doing when I started investing in this company. But I stopped, it really wasn't doing too good for me after a while. I wasn't doing good swinging this stock. So I stopped doing that. All right. And now I'm using the wheel strategy, as you know, for the last 3 months. But it looks like right now, if I'm taking a look at it now in the last month, right? It looks now like there's a pattern here going on, right? It's going between under a dollar, right? Between 90 cents to a dollar 20, dollar, getting close to a dollar 30, right? And it actually can go above that, right? Pre-market or after hours. It can go above this price that you're seeing here. All right, so this is a good company to swing trade with if you want to get your feet wet with swing trading. You've never done it before, you want to try it out. You could try swing trading this company, right? When it goes to under a dollar. You try buying when it goes to under a dollar and selling when it goes to above $1.10, $1.20, right? It's up to you. But as you can see, it's gone down again. It goes up and it comes down. It goes up, it comes down. And so it looks like it has support level at 98 cents, 99 cents, 97 cents. Looks like it has a support level here. All right. And then it's getting rejected once it reaches $1.10, $1.15. That's when it starts to get rejected. So you could swing trade this, ladies and gentlemen. If you don't have a lot of capital to invest in the stock market, you could try swing trading this company. That is how I started investing in the stock market. Okay. But it takes patience and it takes a little bit of courage and boldness to do this, ladies and gentlemen, because we just don't know what's going to happen with stocks, with the reports coming out every week and the news that comes out on these companies every week. We just don't know what's going to happen to their stock, how the investors are going to react to the news and the reports. So it takes a little bit of courage to swing trade, okay? If you're not doing this for a living. If you're not doing this for a living, you're taking a lot of risks doing that, okay? But anyways, that's what I wanted to talk about today. I guess I don't have to make another video on this because I already talked about it. But let me know in the comments below what you think we should do once again, once we reach 100 subscribers. And if it's reasonable, I will try to do that, all right? I will try to, um, do what you ask. And also let me know in the comments below if you want different content, right? If you want me to talk about different stocks, different strategies, let me know in the comments below because I want you guys to learn how to invest in the stock market and make money, not just watch me make money every week, okay? So that's the video for today, ladies and gentlemen. I hope you have a great weekend. And as always,
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.